Your LLC is doing great, and now you're looking for some advice on reducing your taxable income. Here's some good news. Qualified Business Income Deduction, or QBI deduction, which was originally set to expire at the end of this year, is now going to stay permanently thanks to the One Big Beautiful Bill Act signed into law in 2025 July. This means that you can keep 20% of your net profit as a tax deduction on your return every year. Hi, I'm Matt An, EA with An & Company. Today, we're talking about one of the biggest tax breaks for the business owners, Qualified Business Income Deduction. This is getting a lot more attention lately, so if you want to keep more of your money in your pocket, this is something you need to understand. Let's dive in. QBI deduction allows eligible business owners to deduct up to 20% of their taxable business income. This applies if you're an LLC, sole proprietor, partnership, or S-Corp. Basically, all the pass-through entities. In other words, this deduction allows you to reduce your taxable income by 20%. This means that more money stays in your pocket or goes right back into your business to grow your business even bigger next year. Let's take a look at an example. Let's say you run an online education business as an LLC. Your total sales in 2025 are $1 million. Your cost of content creation is $300,000 and your labor cost is $300,000 as well. And there's another $300,000 as your operating expenses, including software subscription fee, equipment lease, advertising and promotions, employee trainings, etc. That leaves you with $100,000 in net profit, which is your taxable business income. Under QBI deduction, you can deduct $20,000, which is 20%. Now, you're taxed on $80K, not the $400K. That's real savings. All right, however, not everyone qualifies. Some service-based businesses like doctors, lawyers, CPAs, enrolled agents, athletes, and musicians are excluded if their income is above certain thresholds. Don't get disappointed yet. Even if you're in one of those excluded categories, you might still get a partial deduction as long as your income is below the certain threshold. In 2025, for married filing jointly, this deduction starts phasing out at $394,600 and it fully phases out at $494,600. And here's the big update with the One Big Beautiful Bill Act, or OBBB Act. Starting in 2026, this fully phased out limit jumps to $544,600 plus annual inflation adjustment, which means that it'll get easier for those higher income business owners to qualify for this big deduction. This 20% deduction is powerful, and I've seen many clients miss out because they thought they didn't qualify or did not fully understand what it is. I'm an EA specialized in small business taxes, working with hardworking entrepreneurs just like you. You want to make sure you're claiming this QBI deduction that you deserve? Schedule your free tax discovery call with me today. We'll make sure you save more with confidence. The link's in the description below. To recap, number one, QBI deduction is now going to stay permanently thanks to the OBBB Act. This 20% tax break is not going anywhere. Number two, certain service-based businesses like doctors, lawyers, musicians are excluded if their income is higher than threshold. Number three, starting in 2026, that full phase-out threshold jumps by $100,000 plus inflation adjustment, which makes it easier for more high-income business owners to qualify. All right, that was all I have for today's topic. If you have any questions around your taxes, feel free to reach out. I have my contact info in the description below. If you find this video interesting, please like and subscribe. Thanks for watching.